Ladies and gentlemen, we hope that you had a refreshing break. We now move on to the second part of our workshop for today. Please welcome back to the stage our experts as they continue their presentation.
Thank you, Ruda. Welcome back, everyone. So now we are going to look at more detail about the qualifying activities that we saw right before the break. Ministerial Decision 265 provides for an express list of what are the qualifying activities for the purpose of the free zone framework. And so, as you can see, in Article 2.1 of MD Decision 265/2023, we have the descriptive list. I already mentioned the list right before the break. I just want to mention key points here. So, first of all, is that you have these 13 types of qualifying activities as well as the related ancillary activities. They can be considered as qualifying activities. And an important note is that, in general, transactions with natural persons are considered as excluded activities, but we have a few exceptions. So for the cases highlighted in blue, which are ownership, management, and operation of ships, fund wealth and investment management, financing and leasing of aircraft, and wealth and investment management services, these are exceptions cases, and in these cases, even when you are transacting with a natural person, they can still be considered as activities that provide for qualifying income. So moving next, when we are talking about qualifying income from qualifying activities, you can perceive this income transacting with different types of persons. So if you are a qualifying free zone person, provided that you met all the requirements from Ministerial Decision 265, you have some flexibility. So you can undertake different types of transactions. So as we saw from transactions with another free zone person who is the beneficial ownership, all are considered qualifying activities. All transactions with another free zone person that is qualifying activity, or it's the final beneficiary recipient of the transaction. When you are transacting with a UAE juridical person, all qualifying activities from the list of Article 2.1 Ministerial Decision 265, they can be considered as deriving qualifying income. Same applies to foreigner juridical persons, provided that is one of the qualifying activities from the list, you are able to derive qualifying income. For the case of natural persons, normally they are considered excluded activity, but the exception applies to three sectors, which are ownership, management, and operation of ships, fund wealth and investment management, and financing and leasing of aircraft. So these are exceptions, and for these three types of qualifying activity, you can also benefit from 0% when transacting with natural persons. And finally, domestic or foreign permanent establishment, you can still transacting with a permanent establishment, and it will be considered as qualifying income, qualifying deriving from qualifying activity, so which means from that prescriptive list. And this is important to bear in mind that you have to meet all the other conditions to be considered as a qualifying free zone person. And an important concept is the concept of ancillary activities. So when we are talking about ancillary activities, they are activities related to one of the qualifying activities from the prescriptive list, and they are also eligible to 0% of corporate tax rate. But here, there is no specific of what is considered as a ancillary activity. So it's important in the concrete scenario, you have to analyze whether these activities are necessary for the performance of the main qualifying activity, or that they make a minor contribution to the main qualifying activity and are so closely related to the main qualifying activity that they cannot be regarded as a separate activity. So you have to analyze the facts and circumstances of the case and analyze the context of your business scenario. So another important point to bear in mind is that you cannot consider a single activity ancillary as qualifying activity per se, if it's a standalone ancillary activity. They need to be part of that type of business. They must form a natural integral part of the main qualifying activity that the free zone person performs. So here we just have, to facilitate the understanding, we have this graph here showing the steps you have to analyze to check whether you are falling within the de minimis requirements or not when you are talking about qualifying activities. So if you remember, we spoke transactions from qualifying activities, they are always subject to zero. And if you are talking about other income, which means other types of activity that are not part of that prescriptive list, you can still benefit from the 0% corporate taxes, provided that you meet the de minimis requirement. So here, just to show you a few steps, if we're talking about a qualifying activity from Ministerial Decision 265, you're going to be considered as deriving qualifying income. If not, and you have to analyze who you are transacting with. If you are transacting with another free zone person, you have to ensure that the free zone person is the beneficial recipient. If the free zone person is the beneficial recipient, the revenue will be included as a total revenue, but excluded from the non-qualifying revenue when you are calculating the de minimis. Whereas if you are transacting with a non-free zone person or a free zone person that is not the beneficial recipient, the revenue will be included as total revenue and as non-qualifying revenue when you are applying the de minimis requirements. So that's why it's important to look at your specific transactions and do this assessment of de minimis requirement. And now we are going to guide you through some of the specific qualifying activities and provide you some examples. We will start with manufacturing of goods or materials. So when we are analyzing manufacturing of goods and materials, first point is to think what is considered manufacturing for the purpose of the free zone regime. So when we're talking about manufacture, we are talking about a process that includes a broad spectrum of activities such as the creation, production, improvement, or assembly of products and materials from raw materials or components. And this includes all activities from the conception of a product, including capital investment, R&D, procurement of raw materials, until the end of the process, until you have a finished product in the final stages of production. And manufacture refers not only to producing new goods, but also improving or assembling pre-existing components. So as you see, we are considering a broad concept of manufacturing. And here, we are also considering what is ancillary to the manufacturing activity. So activities that may be treated as ancillary to manufacturing of goods or materials include post-sale or customer support services, such as installation of a product, warranty, maintenance, activities when you are providing support after the product has been sold. And important to bear in mind that there are some exclusions. So repairs are not considered as part of manufacturing activity, and repairs are typically classified as service and involve restoring or fixing existing products to the original status. So this is not considered as manufacturing. Meaning of goods. It's also important to have clear what we consider as goods for the purpose of manufacturing. So here we are talking about tangible or physical items manufactured or produced for sale that serves a particular purpose or satisfy a want or a need. So for instance, you can have a broader scope of goods like food, clothing, electronic products, furniture, cars, ships, etc. And for intangibles, it's important to notice that intangible items such as software that can be sold separately from a physical asset will not be considered as a good. Whereas if you have a software that is embedded to a product, then they could be considered as a good. So when you have software embedded in hardware that is an inherent part of the hardware, it will be considered as good. So it functions as a single unity and you cannot detach it from the good per se. So that's why we're going to consider the embedded software as a good in this case. So for instance, when we have smartphones or video games or pre-installed navigation softwares in the cars, these are considered as embedded softwares. In types of manufacturing, we also have a broader understanding of the types of manufacturing. So we include a contract or toll manufacturer. So when the manufacturer's goods are produced for and on behalf of another person, and there is a compensation that is treated as derived from the qualifying activity, regardless where the customer is located. As well as we consider the contracts of fully fledged manufacturer. So in this case, we have a manufacturing activity where the goods or materials are manufactured in its own name and their own risk. And in the contract, there is a compensation that will be treated as being derived from qualifying activity if the goods or materials are sold to a distributor. So goods and materials, they need to be sold to a distributor, and the goods and materials sold to a natural person will be considered as an excluded activity, because as a general rule, transactions with natural persons will be considered as excluded activities. And it's important to notice that goods or materials manufactured in the UAE, they do not need to pass through a designated zone. However, for the distribution activity, we're going to see that over this case, we consider that the goods needs to be entered or the activity needs to be conducted from a designated zone. To give you an example of manufacturing of goods or materials, we have a CLLC, which is a free zone person that manufactures paper cups at its own risk. So they are holding the whole risk of the activity. And CLLC also operates as a toll manufacturer with respect to customized cups to some of its customers. During the relevant year, CLLC sells cups to the following persons. So they have different clients with different contracts. They have a contract with a LLC, a juridical person that is a non-free zone person, to produce customized cups with the company logo, and they have a contract specifying the customization. They also have a contract with RLC, a juridical person also located outside the free zone, and it's a distributor. So in this case, they're producing standard cups to RLC, so then they can sell to other persons. In this case, it's a fully fledged manufacturer contract in this regard. And CLLC also has a contract with Mr. H, a natural person that bought cups for his personal use. And in this case, CLLC is a fully fledged manufacturer in this regard. So as you can see, they can transact with different persons, and the corporate tax treatment will depend on who they are transacting with. So for the transactions with natural persons, it will be considered as an excluded activity, whereas for the transactions with non-free zone persons, since this is a qualifying activity, they won't have problem and they can still be subject to 0% CT rate. Processing of goods or materials. So when we are talking about process of goods or materials, we are talking about an activity that includes the preparation, treatment, transformation, or conversion of goods or materials into another form for further commercial or industrial use or sale. And this can be raw materials or semi-manufactured goods or materials. And in the case of processing, an item may undergo a process, but it essentially remains the same. There is no new product that is created here. So for instance, we could be speaking about rust-proofing a car, freezing fishing before packaging, or packaging finishing products. So as you can see, it's a preparation, a transformation, but you are not creating a new product here. And in this type of qualifying activity, you can also be performing alongside some ancillary activities. So here, auxiliary activities to this sector would include, for example, post-sale services that are directly linked to goods or materials processed, or customer support services such as warranty, handling customer queries. These are auxiliary activities to the processing of goods or materials. And an exclusion that we have for the sector is repairs. So here again, repairs are not considered as a form of processing, and repairs are typically qualified as a service because we're not transforming, you are just repairing a product to its original form. And the meaning of goods, that is a broad meaning, it's also considered here for the purpose of processing of goods. Trading of qualifying commodities, this is another qualifying activity we have. And when we are talking about qualifying commodities, we are referring to metals, minerals, energy, and agricultural commodities that are traded on a recognized commodities exchange market, and they are traded in a raw form. So these are key concepts for this qualifying activity. For the raw form, we are talking about natural unprocessed state that is close to the form when the commodity has been harvested or extracted from nature. So here you may have a minimal processing to meet the exchange market standards, but it doesn't change considerably the form of the commodity. And when you are assessing whether your commodity is still considered as raw, you may use of the HSN code. That is an indicator because normally if you have a minimal level of process, you won't have a change or a significant change in the HSN code of the commodity. And also it has to be a commodity that can be traded on a recognized commodities exchange market. And when we are talking about recognized commodities exchange market, we are talking about a commodity exchange market established in the UAE that is licensed and regulated by the competent authority, or we can also refer to a foreigner recognized commodities exchange market of equal standing. So for instance, we have the Dubai Gold and Commodities Exchange, the London Metal Exchange, and you can have other commodity exchanges markets that are of similar recognition level. And in this case, types of qualifying activities would be typically the physical trading, buying and selling of qualifying commodities, trading of associated derivatives used to hedge risks related to such activity, and the auxiliary activities natural to that type of business. And a note that is important here is that the trade activity does not necessarily need to be performed through an exchange, because we may also consider off-exchange transactions as qualifying activity, provided that these qualified commodities could have been traded in a recognized exchange market. To give you an example of trading of qualifying commodities in the raw form, we have our LLC, a free-zone person that trades cotton bales. And the cotton is harvested and ginned to remove seeds and then compressed into bales. So here you have a minimal processing of the cotton, but the cotton still retains the raw form of cotton. So, and also it's common that you have cotton bales to be traded on a recognized exchange market. So during the year, RLC sells cotton bales to OLC, and this is considered as a qualifying activity of trading of qualifying commodities. And we have another scenario of PLC, another free zone person that trades cotton fabric. So during the year, PLC sells cotton fabric to ELC. And in this case, it's a slightly different scenario because the cotton bales are woven into fabric for making clothes or other textiles. And this process naturally changes the form of the cotton. So here we are no longer talking about cotton, but cotton fabric. So in this case, we consider that the cotton has lost its raw form. And also another indicator is that cotton fabric cannot be traded on a recognized commodities exchange market. So it's another indication that this wouldn't be considered as a qualifying commodity. So we conclude that PLC is not engaged in qualifying activity of trading of qualifying commodities. Another qualifying activity we have in the free zone framework is the holding of shares and other securities. So when we are talking about holding of shares and other securities, we refer to shares of any class in the share capital or other types of equitable interests that entitle their holder to receive profits and liquidation procedures. We also are talking about negotiable or non-negotiable financial instruments that are or can be traded in a public or a private market, that they are convertible or exchangeable into a security, and which confer a right to purchase a security. And it's important to notice that there are some exclusions. So here, financial or investment instruments that are issued pursuant to a securitization of receivables from non-financial assets, royalties, management fees are excluded here. And also when we are talking about active trading. So if you are trading shares and securities and not held in those for at least 12 months, you cannot be considered as holding of shares and other securities for investment purposes. And it's important to notice that if shares and securities are traded on a recognized stock exchange, it's deemed that the transaction is not made with a natural person. So it will be treated as a qualifying activity, provided that the natural person hold for a 12-month ownership of those shares or securities. Here I have an example of the meaning of investment purposes. Here we have ZLC, a free zone person that purchased 2% shares of JCO, a foreigner company, in November 2024 with the intention to hold for a 12-month period at least. In December 2024, ZLC received dividend from JCO. And ZLC has the intention to hold the shares for 12 months. So this will be treated as in dividend income from qualifying activity when ZLC is preparing its tax return for the January to December 2024 tax period. However, in April 2025, due to financial constraints, ZLC decided to sell the shares of CLLC within less than 12 months, and ZLC realized a capital gain from this transaction. So in this scenario, since ZLC failed to hold the shares for at least 12 months, the dividend and capital gain here will not be treated as being derived from a qualifying activity of holding of shares and other securities, and will be treated as non-qualifying revenue. So in this case, Z will be considered a qualifying free zone person for this tax period only if it continues to meet the de minimis requirements. So only if this is a very minor part of the LLC transactions. Another qualifying activity we have is the ownership, management, and operations of ships. This activity of ownership, management, and operation of ships cover different types of transactions. Here we can consider the ownership, management, and operation of ships used for the international transportation of passengers, goods, or livestock, as well as towing activities. We are also covering the provision of general assistance to ships, dredging activities, offshore oil field and maritime services, as well as leasing and chartering of ships on bareboat basis. We are also covering shipping broking services, organizing and overseeing voyages when it's traded as an ancillary activity to this ownership, management, and operation of ships. And for this qualifying activity, certain exclusions apply. So it's important to notice that when you are talking about ships used for local transportation or for leisure or recreational purposes, they are excluded and they are not considered as qualifying activity, as well as the case of floating hotels, restaurants, or as well as casinos. They are considered as excluded. They cannot be considered as a shipping for the purpose of this qualifying activity. And it's also important to highlight a point that I mentioned earlier on, that transactions with natural persons in relation to this type of qualifying activities are treated as qualifying activity and they are not considered as excluded activity. So this is one of the few qualifying activities where transactions with natural persons are still included. And two key concepts for these qualifying activities are ships. So when we are referring to ship, it's a broad concept. We are talking about any structure normally operating or set for operation in maritime navigation, regardless of its power and tonnage. And ships also include tugboats, barges that are used for marine operation or to transport goods or passengers from vessels in international waters to the UAE domestic waters or to maneuver other types of ships, container ships or passenger ferries. So it's a broad concept of ships. And also the meaning of international transportation. Here we were referring to the movement of goods or persons beyond UAE territorial waters. So transportation refers to the movement between two ports in the UAE and is considered as international provided that is an integral part of a broader itinerary. So you may have some stops in the UAE territory, and this would be still considered as international transportation as long as it includes a broader itinerary. And to give you a concrete example on this, we have a PLLC, a free-zone persons that operates a fleet of ships that offer round trips, travel packages between several ports, covering in its route Dubai, Abu Dhabi, Doha, and Manama. So in this case, the passengers can enjoy multiple specialty restaurants, shows, and other entertainment activities as they travel back to the port of origin. And in this case, PLC ships transit through non-UAE ports. So in this case, it doesn't fall within the exclusion for domestic transportation. And also, in this case, the ships do not fall in the exclusion of floating hotels. So even though they are transporting natural persons, this is still okay because the exclusion to natural persons does not apply to this qualifying activity. So we conclude that PLLC is performing the qualifying activity of ownership, management, and operation of ships. Another example from a very important sector here in the UAE, we have offshore oil field and maritime services. In this case, we have DLLC, a free-zone person that owns and operates drilling rigs and renders drilling services to its customers. DLLC operations related to oil and gas exploration and extraction, and these services are included in this qualifying activity of ownership, management, and operation of ships. And we conclude that the LLC is performing the qualifying activity of ownership, management, and operation of ships. And now I'll pass to my colleague Zubair, who will continue covering the qualifying activities. Thank you.
Thank you very much, Juliana. So we will carry on looking at the qualifying activities, and we'll start with reinsurance services. So what are reinsurance services for the purposes of this qualifying activity? They are the reinsurance operations as regulated under the federal law number 6 of 2007. And it includes the activity of assuming all or part of the risk undertaken by another insurer or reinsurer under a contract or insurance policy or reinsurance policy. And it's important to note this is not insurance, it's a reinsurance service which must be conducted. And another condition is that it must be subject to the regulatory oversight of a competent authority in the UAE. Now, on the right-hand side of the slide, we've got a number of activities which would be considered as reinsurance services. So that would be underwriting premiums, salvage and subrogation activities, claim handling or management, and loss adjustment or claims management. And we also have ancillary activities, and those would be the investing activities, actuarial services such as forecasting, and also risk management. So risk management might be offered to other insurers. And it's important to remember, as was covered earlier in the presentation, that the ancillary activities, the three that I just mentioned there, must complement the qualifying activity itself. They cannot be included on a standalone basis. They must naturally complement integrally the part of the qualifying activity first and foremost. So let's look at a simple example of reinsurance services. Here we have PLLC, a free zone person, and there are two contracts. They have a contract with RLLC, which is a primary insurer, and for RLLC, they are offering reinsurance services. Now, PLLC also provides insurance policies directly to insured persons, and this would not be considered as a qualifying activity. So PLLC, as a free zone person, is engaging in two streams here, one of which would be considered as a qualifying activity and the other would not. Moving now to fund management services. So fund management typically involves managing a portfolio of investments on behalf of third-party investors. So that could be a mutual fund, a hedge fund, or a pension fund. And the goal, of course, is to maximize returns. Again, for this qualifying activity, it must be subject to the regulatory oversight of a competent authority in the UAE. What does it include? It includes portfolio management, investment planning and strategy, risk management, investment diversification, discretionary and non-discretionary management services, and day-to-day operation of the fund. Now, there's one important point to note with fund management services. It also can include the delegation of such activities. So if this is delegated to another investment advisor, that would also be included or considered as a qualifying activity. And we'll just come on to an example in just a moment on that. Again, another important point to note for fund management services, and this was mentioned by Julian just a few moments ago, is that transactions with a natural person in relation to this specific qualifying activity and a few others can be still treated as a qualifying activity. It's not an excluded activity. So ordinarily, with transactions with a natural person would be excluded, but for this qualifying activity, it is not. So let's look at a couple of examples. We have here NLLC, and NLLC is a regulated investment manager. We have a fund with total assets of 300 million, deriving a 20% return, so that would be 54 million for equity and 6 million for debt. Now, N LLC, in this example, receives 3 million as a management fee and 3.6 million as a performance fee. Now, that 6.6 million aggregated together is considered as a being derived from a qualifying activity of fund management services in relation to the fund. So it is N LLC that we are considering and we're looking at here. It's not the fund itself. Turning to delegation. So I just mentioned a moment ago that this can be delegated to another advisor. And in this example, we have M LLC, a free zone person, and also C LLC, a free zone person. So M LLC is the investment manager, is a free zone person, and they are managing a special fund, a cryptocurrency fund with a value of 10 million dirhams. Now, they decide to delegate management of 20% of that fund. So 2 million of that fund, they decide to delegate to C LLC for their expertise in cryptocurrency. And for that delegation, they provide and pay a fee of 1.5%. Now, in this scenario, we're looking at C LLC. They have been delegated this from M LLC, so they're not managing the fund themselves directly, but they have been delegated this from M LLC. And for the purposes of this regime, C LLC, that 30,000 that they receive, the 1.5%, will be considered as being derived from the qualifying activity of fund management services. Moving now to wealth and investment management services. So wealth and investment management is a holistic service that extends beyond just investing, and it encompasses all parts of a person's life. Again, a couple of points, important points to note. Again, this is subject to the regulatory oversight of a competent authority in the UAE. And again, although with natural persons ordinarily, as I've just mentioned, it would be considered an excluded activity, this is an exception. So when wealth and investment management services are being delivered to natural persons, it can still be considered as a qualifying activity. And it includes discretionary and non-discretionary investment management and advisory services, portfolio management, wealth and investment advisory services, and retirement planning and estate planning. So in terms of ancillary services, it would include risk management, it could be market research, and also investment analysis. Again, the ancillary services must complement the qualifying activities as are shown on the slide here. So let's look at, again, a simple example for wealth and investment management services. Here we have a LLC, a single family office, and they are a free zone person. They are providing, as many family offices do, wealth and investment management services to family A. So in this scenario, family A are natural persons, but this can still be considered as a qualifying activity. Now, in this situation, ALC is not regulated by a relevant competent authority. And by virtue of this, it would not be considered to be providing or deriving income from a qualifying activity. Now, if I contrast this with another example, in exactly the same kind of layout with a company, a family office, providing the services to a family, but they are regulated by a competent authority, then that would be a qualifying activity. So the point highlighted from this example is the fact that a LLC is not regulated by a competent authority. Moving now to headquarter services to related parties. So headquarter services, it includes the provision of specific services to resident or non-resident related parties, and I will just in a moment talk about Article 35 of the Corporate Tax Law and how that's relevant to this activity. But as we know, a headquarter company will have the responsibility for the overall success of the group and the group's performance itself. And it will also have its mind on corporate governance for the group in totality. So in terms of the services that it provides to related parties, it could be administering, overseeing business activities, senior and management services to other companies, captive insurance services, and general, it will consider the expenditures of its related parties. And we'll look at that in just a moment with an example. But importantly for this, related parties. And I mentioned Article 35 of the Corporate Tax Law. So it's very important for this qualifying activity that Article 35 of the Corporate Tax Law is considered. So for PEs, whether they are domestic or foreign PEs, they must be considered in terms of the arm's length principle must be abided to. And so that would be juridical persons and branches of juridical persons as per the corporate tax law. And it's very important if there are entities which are receiving, as per the corporate tax regime, a 0% rate, even the transactions which are priced between those entities or between those related parties must still abide by the tax transfer pricing provisions as per the corporate tax law. So we have here an example of TLLC. And TLLC is a free zone person, and it's the headquarters of a multinational coffee chain with various subsidiaries. Now, for these subsidiaries, it provides both the provision of goods and also the provision of services. Now, with respect to the services, it provides support services. It provides HR, marketing, and it does this for its subsidiaries for a single bundled fee. They also provide goods, and that's procured and distributed to its subsidiaries with its own proprietary coffee blend, and that's to ensure consistency and quality from all of its subsidiaries. And these again are sold at a separate price. Now, for this qualifying activity for headquarter services, it is only the service which would be considered as a qualifying activity. The goods would not fall under this qualifying activity. They might, and they may fall under distribution, which we'll come on to shortly, but for the provision of services to related parties, it would only be the support services that are provided to its subsidiaries. And importantly, again, to reiterate, Article 35 of the Corporate Tax Law must be considered if they are providing these services to their related parties, whether overseas or whether branches in, or PEs, domestic PEs in the UAE, they need to be priced on an arm's length basis. Considering the next qualifying activity of treasury and financing services to related parties. So this includes a provision of cash and liquidity management for related parties, debt management, financial risk management, and centralized payment and collection activities, as well as cash pooling. Related parties, again, for this qualifying activity has the same importance as I've just mentioned. Article 35 of the Corporate Tax Law must be considered, and that is for foreign or domestic PEs, and any transactions with these PEs, with these branches, must be considered on an arm's length basis for the free zone regime. Also, under treasury and financing services, there's a concept of self-investment. And we'll just come on to a moment in an example of how self-investment can fall under this as a qualifying activity, and the income will come under the qualifying activity umbrella, and what the requirements specifically for self-investment would be. Also, just to touch on shareholder loans. So shareholder loans fall within the scope of financing services, and there's no quantitative threshold for shareholder loans. So I just mentioned now self-investment, and we have a very simple example here with you LLC as a free zone person, and they deposit their working capital into an interest-bearing account, and they derive interest income. Now, it's this action which would be considered, or could be considered, I should say, for now until we reach the conclusion, as a qualifying activity. And the reason for that is there must be adequate substance in relation to the activity. And in this instance, there is. And because of having substance in relation to this qualifying activity, here the interest income will be treated as arising from a qualifying activity. We also have an example on cash pooling. So I mentioned one of the activities which falls under treasury and financing services would be cash pooling. So we have PLLC, which performs this qualifying activity for its group entities, and it includes cash pooling services. So we have in the example here two subsidiaries, R LLC and C LLC, and R LLC has surplus funds, while C LLC is in a deficit. Now, rather than C LLC looking outside for external parties and funds from external parties or borrowing from third parties, it accesses a centralized pool which is managed by PLLC. And by virtue of the funds being transferred through this cash pooling, which is provided and facilitated by PLLC, this would be considered for PLLC as a qualifying activity. And again, this example just highlights there are several entities here which are related parties, and all of these transactions, albeit PLLC's income may benefit from the 0% rate, all of this must be priced on an arm's length basis. And that's integral and very important for this qualifying activity. Now, the next qualifying activity is the distribution of goods or materials. So Ritha mentioned earlier on in the presentation about designated zones, and it is this qualifying activity for which designated zones are relevant. And so, as Ritha mentioned earlier, Cabinet Decision 59 of 2017 specified the designated zones for VAT purposes. And now, looking at the free zone regime for CT purposes, any designated zone must also be a free zone considered as is for corporate tax purposes also. And so you will be required to check with the free zone authorities as to whether those requirements are met. So turning into some detail with distribution. Distribution is the process of transporting products from a manufacturer, storing them, and then selling them to resellers. And again, this is an important point for distribution. For this to be a qualifying activity, the distribution of goods or materials must be to resellers. They cannot be to end users. So distribution includes the buying and selling of goods, materials, it could be an importation, inventory management, exportation, warehousing, inventory management, and order taking and processing. Now, a key feature of what I've just mentioned in terms of selling to resellers, another point is also that the distributor needs to take title to the goods or materials. And this is an important distinction when we come on to logistics services in just a moment. For distribution, the distributor must hold the title to the goods or the materials. Now, returning back to the fact that this must be undertaken from a designated zone. So how does this work in terms of the goods and materials, and when is the designated zone relevant? Well, they are relevant for when goods or materials are entering into the UAE. And if they enter into the UAE, they must be imported through a designated zone in the UAE. They must physically pass through that designated zone. However, if the goods or materials are already present in the UAE, they're produced in the UAE, or they're being transferred within the UAE and they are not being imported, then they do not need to physically pass through a designated zone. The relevance in this scenario is that the activity itself, the activity which is the distribution activity, must be conducted and performed in a designated zone. But the goods themselves need not pass through that designated zone. And I mentioned just a moment ago about resellers. So the distributor must sell the goods or materials to a person that resells, or they process and alter the goods or materials for resale afterwards. So for example, a consulting company which purchases laptops for its employees would not be a reseller. They would consume and use the products themselves. But an electronic retail outlet, which would then sell on the laptops to another person, would be considered a reseller. And so it's the distributor who has the requirement for themselves to do this due diligence. And they must seek confirmation themselves through undertaking or a contract to ensure that the customer themselves are a reseller. And that's a crucial part or a crucial requirement for this to be considered as distribution. And just to add, there is no limitation or requirements in the mode of distribution, whether it's by land, by air, or by sea. And again, to add, what was mentioned earlier in terms of goods equally applies to distribution activities. So let's work through a few examples which highlights the principles that I've just outlined, and we will start off with high sea sales. So we have our LLC, a free zone person in a designated zone, which buys goods from a manufacturer in country A. So our LLC, free zone person, located in a designated zone and undertaking their activities in that designated zone. They are shipping the goods directly from country A to country B, and the goods are not entering directly in the UAE, and they're not obviously therefore going through a designated zone. In this scenario, our LLC is performing the qualifying activity of distribution of goods or materials. So high sea sales, whatever the mode of transport, given the fact that our LLC is conducting its activities through a designated zone, the goods do not need to pass through the designated zone, and this will still be considered as a qualifying activity. Turning now to the import of goods or materials. So we have OLLC, again based in a designated zone in the UAE, and they buy goods from a manufacturer in country A, and then they sell them to a retailer in the UAE. Now, in this instance, the goods are shipped from country A to OLLC in the designated zone, and they are then distributed from the designated zone. And its activities are, of course, conducted in the designated zone, and the goods are imported through the designated zone. And therefore, this will be considered as a qualifying activity. So it's important to note that for the importation of goods, for them to be considered as distribution, as a qualifying activity of distribution of goods or materials, those goods or materials must pass through the designated zone. In this example, we are now looking at the export of goods or materials. And here we have PLLC, again the same as the last two examples. We have PLLC in a designated zone and conducting its activities in that designated zone. So they buy goods from a manufacturer in the UAE this time, and they intend to sell them to a retailer outside of the UAE, in country C. Now, the goods are directly shipped from that manufacturer in the UAE, and they go directly to the retailer in country C. The goods in this situation do not need to pass through a designated zone. For this to be considered as a qualifying activity, it's a distribution activity itself that PLLC is doing, which needs to be conducted through a designated zone. But because the goods are already in the UAE, they do not need to exit by virtue or pass through a designated zone when they are sold by PLLC. And therefore, in this example, PLLC is performing the qualifying activity of distribution of goods or materials. And distribution within the UAE. So here we have HLLC, again the same scenario, they're based in a designated zone and their activity of distribution is being conducted from a designated zone. So the goods are shipped directly from the manufacturer to the retailer in the UAE. And whilst they're conducting their activities in a designated zone, given that the goods are already in the UAE, they do not need to pass through a designated zone. And therefore, in this situation, HLLC is performing the qualifying activity of distribution of goods or materials. So, from the last few examples, it's very important to understand what is happening and who are the transactions with. And that will dictate whether the goods need to pass through a designated zone. And equally important, the fact is, for all of these scenarios, the activities themselves, which are for the distribution, not necessarily the goods or the materials, but the activity themselves must be conducted through a designated zone. And just to add context, so some of the points that we mentioned earlier, we have an example here where ZLLC is a free zone person in a designated zone, and they are engaged in the distribution of laptops. Now, during a year, they have three sets of customers. We have JLLC, which is a juridical person and it's a reseller. We have CLLC, also a juridical person, but they are purchasing for their employees and not intending to resell the laptops. And then we also have natural persons who are purchasing the laptops for their own use. Now, with these three categories, it's only the goods which are distributed to the laptops which are distributed to JLLC, which would fulfill the requirements to be considered as the qualifying activity of distribution of goods or materials. And that is by virtue of CLLC not being a reseller and using the laptops for its own consumptions, and by virtue of the natural persons not being juridical persons. Now, an important point to understand and appreciate for the distribution of goods or materials is the difference between a distributor and a sales agent. And this example will highlight that. So we have a book publisher at the top who is a non-free zone person, and then we have a distributor co as a juridical person, and sales agent co a juridical person. The distributor has a contract for distributing, and the sales agent has the contract for marketing the books. Now, for the distributor, they purchase the books from the publisher, and then they sell them to retail shops. And in this situation, the distributor co is conducting the activity the qualifying activity of distribution, and that's because they're doing so from a designated zone and they're selling the books to a reseller. However, the situation is different for the sales agent. So the sales agent is a free zone person and they are in a designated zone, but their contract with that book publisher at the top is to market and advertise their books, and they do so on a commission basis. Now, the sales agent co will market, they will advertise the books from the publishing company to the various retail shops, but the retail shops will then buy directly from the book publisher, and they will not buy from the sales agent co. So the sales agent co is effectively getting a commission for their activities, and therefore this would not be considered as distribution of goods or materials. There is an important distinction between the two scenarios, and therefore resulting in distributor co conducting a qualifying activity and sales agent co not conducting a qualifying activity. So just to wrap up the qualifying activities, last but not least is logistics services. So two important differences to note, or distinctions to note, with distribution. And the first is that with logistics, they do not necessarily take the title of the goods or materials which they are storing or transporting. It's only the supply of a service rather than the supply of goods. And that's one important distinction to note between distribution. And secondly, for logistics, there is no requirement for this to be conducted through a designated zone. It needs to be conducted through a free zone rather than a designated zone. The designated zone requirement is only for distribution of goods or materials. So, diving into logistics services, what does it include? It's the storage and transportation of goods or materials on behalf of another person without taking the title to those goods. And that can be cargo handling, warehousing, container storage, customs brokerage services, document preparation, packing and unpacking, and so on. Now, for clarity, to also highlight the last mile delivery services. So where the free zone person performs all of its, or most of its logistics services within a free zone for its customers in the UAE, and outside of the free zone or the foreign customers, it provides last mile delivery services. The last mile delivery services will still form part of the free zone person's logistics as a qualifying activity, and that needs to be considered as such. And there's one important exclusion, and this we'll cover in an example in just a moment, and that's an exclusion where logistics services will not include the movement of people. The movement of personnel will not fall under logistics services. And again, as with distribution, there is no limitation on the mode of delivery, so that can be by air, by sea, or by land. There's no restriction. So logistics services. Here we have an example of R LLC, a free zone person, and they are providing the logistics services of goods and people to H LLC, a non-free zone person. And during the relevant year, they provide transportation of goods at 1.5 million, warehousing at 1.7 million, and freight forwarding at 800,000. So those three activities or services totaling 4 million. And they also have the movement of personnel at 1 million dirhams. Now, the total revenue that our LLC generates is 5 million dirhams. Now, given that movement of personnel is not considered to fall as per the exclusion that I've just mentioned, and is not considered as logistics services, it would not be considered as being derived from a qualifying activity, and therefore it will be non-qualifying revenue. Now, as our LLC's non-qualifying revenue of 1 million dirham would then exceed the 5% of the total revenue of 5 million, our LLC would fail the de minimis test, and therefore, by virtue of providing the movement of personnel, would no longer be a qualifying free zone person, despite the other services it provides. That is the end of qualifying activities, so I will now pass on to Rida, who will cover excluded activities. Thank you.
Thank you very much, Zubair. So now I think the last part, which is related to qualifying activities and qualifying income, is related to the activity that are not that will not be considered as qualifying activities because they are expressly excluded from the scope of the qualified activities. And those activities are summarized and they are provided, and they are summarized in this slide, and they are provided by Article 2.2 of Ministerial Decision 265 of 2023. So basically, the excluded activity consists first of transaction with natural person, insurance activities, activity from the ownership or exploitation of immovable property, banking activities, and financing and leasing activities. But the excluded activities, as you can see, they have exceptions. So the excluded activity itself is an exception, but there is an exception to the exception. So transaction, basically with natural person, they will be considered as an excluded activity, except for specific 3 activities, which are the ownership, management, and operation of ships, fund management, wealth management, and investment management, financing and leasing of aircraft. And of course, since it's an exception to the exception, it will be considered as a qualifying income subject to meeting the other conditions. The second excluded activity is the insurance activity. The exception to that is reinsurance, as explained by Zubair, which is considered as a qualifying activity, and also captive insurance in the context of headquarter services, when a company provides captive insurance to related parties to, as you know, and the insurance entity within a group of entities. So captive insurance in the context of a group of entities are the headquarter services, it will be considered as, in that case, a qualifying activity because it's an exception to the exception which is an excluded activity. The ownership, exploitation of immovable property also is an excluded activity, and the exception is when you get income from a commercial property which is located in a free zone for corporate tax purposes, where the transaction is with another free zone person. We have also banking activities. We have also the finance and leasing activities, with 3 exceptions related to the ownership management of ships, treasury and financing services to related parties, and the financing and leasing of aircrafts. So this is, I think, a summary of the excluded activities as per Ministerial Decision 265 of 2023. And of course, any income from an excluded activity will be considered as a non-qualifying income, which will be considered for the sake of the de minimis. So if the total of the excluded activity exceeds 5% of total revenue, or if the total amount of the excluded activity exceeds 5 million dirham, whichever is lower, the 5% or the 5 million, then you don't meet the de minimis requirement, and then you will lose the qualifying free zone person status. If you remain below this threshold, then this income will still be considered as qualifying income because you don't cross that threshold, whichever is lower, 5% or 5 million. So if we go to the transaction with natural person, as we said, any transaction with natural person is considered as an excluded activity except the transaction in relation to ownership, management, and operation of ships, fund management services that are subject to regulatory oversight by a competent authority in the UAE, wealth and investment management services also that are subject by a regulatory authority, and financing and leasing of aircrafts. If we take an example on transaction with a natural person, F LLC is a free zone person. It deals in the qualifying commodities of gold and silver. F LLC makes sales to natural person and also to juridical person who are corporate customers. Sales made to natural person will be treated as an excluded activity, and as I said, it will give rise to non-qualifying revenue. The sales made to corporate customer will be treated as a qualifying activity of trading in qualifying commodities subject to meeting all the other requirements. Banking activities. So what does it mean, banking activity, for the sake of the excluded activity under the free zone corporate tax regime? Basically, it means regulated financial activities such as receiving deposit, providing credit facilities, currency exchange, monetary intermediation, providing electronic retail payment, arranging for or marketing of licensed financial services. And then basically in that case we have, as I said, certain activity which are excluded from the banking activities because those are considered as qualifying activities. And then in that case we have fund management services, wealth and investment management services, and treasury and financing services to related parties. So those will not be considered as banking activities, these three, and then of course if they are provided, they will constitute a qualifying activity and they will benefit from the 0% corporate tax rate on qualifying income, subject to meeting all the other requirements. So if we take an example on banking activities where it interacts with the treasury, with providing treasury services, we have B LLC, which is a free zone person. It is a bank which is established in a free zone for corporate tax purposes. B LLC has a branch in country B, in a foreign jurisdiction that needs extra funds to its operation. So the branch requests liquidity from B LLC, the foreign branch. B LLC transfers funds to its branch. Basically, this is considered as a treasury function performed commonly by banks. This treasury service could be treated as a qualifying activity of treasury and financing services to related party, provided of course, the minimis threshold is met. So of course, banking services are excluded, banking activities are excluded activities, but in this specific context, because it is providing a loan to a related party, it will be considered as a qualifying activity because this specific activity is considered as a qualifying activity under Ministerial Decision 265, as explained by Juliana and Zubair. Insurance activities. So insurance activities, they are considered as excluded activities. First of all, what is insurance activity? So insurance activity, it means the insurance operation, insurance services that are regulated and subject to regulatory oversight by a regulatory authority in the UAE. And they include commonly accepting risk, carrying contracts for insurance purposes, life or non-life streams. There are two exceptions to the insurance activities as an excluded activity. The first one is reinsurance activities, because reinsurance is a qualifying activity. The second one is captive insurance in the context of providing insurance to related parties. And these two specific activities, they will be considered as qualifying activities. So basically reinsurance activities and captive insurance provided to related parties. And then they will get the 0% qualifying income. Let's take an example on insurance. So basically we have captive co, a free zone person, which is part of a multinational group that is engaged in providing regulated insurance services. The group entity, they provide regulated life and non-life insurance services to third parties. And of course, these are considered as excluded activities. Captive co, it provides also internal insurance coverage only to the group entities, to the member of the M&E group. The services of captive co are different from those provided by the group entities. And captive co, in that case, is considered to provide a qualifying activity, which is a headquarter service to a related party. And the income derived from that activity by captive co will be considered as a qualifying income. Whether it is captive co is a qualifying free zone person, this will need captive co to meet all the other requirements to be considered as qualifying free zone person, but that specific income from captive insurance will be considered as qualifying income. Finance and leasing. So finance and leasing means the provision of credit or financing for any kind of consideration, including digital and crypto currency. It should be subject to also to regulatory oversight by a regulatory authority or competent authority in the UAE. The financing and leasing is an excluded activity. However, there are three exceptions which would be considered as a qualifying activity. The first one is financing and leasing of ships, financing and leasing of aircraft, and financing services provided to related parties. And of course, these three types of income, they will be considered as an income from qualifying activity. If we take the example of O LLC, can you switch off the mobiles, please, or find, yeah. O LLC is a free zone person, which is a regulated lessor. O LLC contracts with a third party to provide cars on lease in returns for rental payment. The rental income derived from the leasing activity in that case is an income from an excluded activities because, as we said, the only exception to the financing and leasing are three exceptions, and it's not the leasing of the financing and leasing of aircraft. It's not the financing and leasing of ships, so it will not fit into that exception to the exception, and then this will be considered as an income from an excluded activity. Some highlights on the taxation of a qualifying free zone person, and I think the best way is to take an example, look at this example about the de minimis requirement. So ABC is a free zone company established in a designated zone in the Emirate of Dubai. ABC maintains adequate substance, prepare audited financial statement annually, and did not elect to be subject to tax at the rate of 9%. ABC derives the following income from its activities, from its business activity. So revenue from distribution of goods and material to a free zone person and non-free zone person that resell these items for 8.5 million. And revenue from distribution of goods and material to natural person who are end customer for 350,000. In that case, the non-qualifying revenue, so the 350,000 non-qualifying revenue, it represents 3.85%. It does not breach the de minimis threshold of 5%. And then basically ABC free zone co will be considered as a qualifying free zone person, and it will be eligible to the 0% corporate tax rate on the entirety of its income, including the non-qualifying income that did not breach the de minimis threshold. Now let's take another example, which is dealing with the computation itself between a free zone parent and a domestic permanent establishment. So GLLC is a qualifying free zone person. It has operation in the free zone, which is a free zone parent as we referred to, and also outside the free zone as a domestic permanent establishment. And I think now you are used to this terminology. It has the following revenue and expenditure. So basically, for year, of course, tax period, assuming it's tax period 2024. So the revenue and expenditure allocated or related to the qualifying activity by the free zone parent is 1 million, the expenditure 600,000. Revenue allocated or attributable to the domestic permanent established 2 million, and 1.4 million of expenditure. And then we have some common expenditure that are incurred by the domestic permanent establishment in relation to certain functions that are support function, HR function, that are used by both the free zone parent and the domestic permanent establishment for 300,000. In that context, what the free zone guide highlighted is that we should apply some appropriate allocation key to attribute shared expenses. And in this case, the relevant allocation key would be the headcount, since we are dealing with HR services. So basically, in that case, we should allocate 50% of the shared expenditure to the free zone parent. And then 150,000 out of 300,000 should be allocated to the free zone parent. The rest should be allocated to the domestic permanent establishment. And then in that case, if we look at the computation, the revenue allocated to the free zone parent as, is 1 million, direct expenditure 600,000, but then also we need to deduct the shared expenditure of 150,000, and then at the end we'll have a net profit of 250,000. We do the same for the domestic permanent establishment. So we have a revenue of 2 million minus direct expenditure of 1.4 million, and then we allocate only 150,000 and not 300,000 in terms of shared expenditure, because some of it should be allocated to the free zone parent, and then we have 450,000 of net profit. And then in that case, the free zone parent will be eligible, the free zone person will be eligible to 0% on the 250,000, which is a qualifying income of the free zone parent. The domestic permanent establishment is subject to corporate tax at the rate of 9% on the 450,000. Some highlights on the compliance and reporting obligation. I think it's very important, as highlighted by the Director of Taxpayer Service at the FTA, that all free zone person need to register for corporate tax purposes according to the timelines provided by the FTA, so FTA decision number 3 of 2024, to avoid any penalty for not applying for registration as per the deadline set by the decision that I mentioned. if you are a qualifying free zone person and you know that the entirety of your income is a qualifying income that is eligible for 0%, and you met all the conditions for the qualifying free zone person status, still you need to be registered for corporate tax. So basically, considering even in the situation that the entirety of your income is a qualifying income, you will not pay CT when you file, of course, on time, because you get 0% on that income. Still, you are required to register for corporate tax purposes. As a qualifying free zone person, you need to file within, of course, register for corporate tax, and then, of course, you need to file within 9 months from the end of your relevant tax period. You need also to maintain all records and documents for corporate tax purposes for 7 years as provided by the corporate tax law. And you need to have your financial statement for the entirety of the person, not only for the free zone operation. I think I mentioned this, but it's good to mention this again. The audited financial statement, they need to be provided for the entirety of the free zone person. So not only the presence in the free zone, but also the presence outside the free zone, whether in the UAE or outside the UAE. So assuming you are a free zone person, a company incorporated in a free zone, you have a domestic branch in the UAE, in Abu Dhabi, in Dubai, which is considered as a domestic permanent establishment. You have also a branch outside the UAE, assuming in Bahrain, in Saudi Arabia, you have 2 branches, one in Bahrain, one in Saudi Arabia. Your audited financial statement needs to be provided for the entirety, for the whole, all the person, because it's one juridical person. So you need to provide your audit financial statement not only for the free zone person, for the free zone parent, the operation in the free zone, but for the the entirety of the legal person, including the operation in the free zone, outside the free zone in the UAE, and outside the UAE. So the foreign branches, as I mentioned, in Bahrain and in Saudi Arabia. There is an example here, we talked about it. I think maybe this is a question that has been submitted also. So if you are a non-resident person and you have a branch in the free zone for corporate tax purposes, is there a situation where this branch is not required to register for corporate tax purposes? There is one situation when this branch is not considered as a permanent establishment. So if the branch falls into the exception provided by Article 14, Clause 3 of the Corporate Tax Law, which is referring to the auxiliary and preparatory activities, then in that case, it will not be considered as a permanent establishment and it will not be required to register for corporate tax purposes. What are the applicable accounting standards? Basically, a free zone person or qualifying free zone person is required to prepare financial statement based on the accounting standards that are accepted in the UAE for corporate tax purposes. So those are IFRS or IFRS for small and medium enterprises if the revenue does not exceed 50 million, or the cash base of accounting if the revenue does not exceed 3 million. And here we're talking about the revenue, not the net profit. Audit financial statement, as we mentioned earlier, you are required to prepare audited financial statement for corporate tax purposes, irrespective of the level of your revenue. I mentioned already, no separate financial statement regarding just the free zone operation. The financial statement, they need to be provided for the entirety of the person. However, the FTA can ask qualifying free zone person to provide documentation on how the allocation of profits, the computation of profits has been done between the qualifying income and the taxable income that is not a qualifying income, as we discussed regarding the example. So on the allocation key, if there are shared services, how those have been allocated to the free zone parent and the domestic parent establishment. So FTA can ask for supporting documentation regarding these elements. Thank you very much. I think I hand over to my colleague Rhoda to take us through the Q&A session. And hopefully that you benefited from the session. I wanted just to explain that we try to cut through complexity and to simplify and provide as much details as possible. But of course, you need to go through the free zone guide and the legislation in order to understand better the various feature of the free zone corporate tax regime. Thanks again. I hand over to Rhoda.
Thank you so much, Rida, and special thanks as well to Juliana and Zubair. We now move to an important part of today's agenda. We will be gladly responding to your inquiries and questions about corporate tax, where when registering for this workshop, many of you asked questions, and the team of experts will now answer most of the questions raised as I join them to the panel. Starting with the first question, Rida. An entity who is incorporated in Sharjah, mainland, has a mainland license and a free zone license. Does it need to register for both licenses separately for corporate tax?
So thank you very much. So since the entity, the registration is per taxable person, even if a taxable person has few licenses, they need to register one time for corporate tax purposes. And then if they obtain a license at a later stage, they need to add the new license to their profile. So if you are, for example, a mainland entity, you incorporated in mainland, not in a free zone, and then at a later stage you established a branch in a free zone and obtained the license for that branch, you need to add that license to your profile under the same tax registration number for corporate tax purposes. Okay?
Thank you so much, Rida. Moving to the next question, Zubair. Does a VAT registration trigger corporate tax registration for free zone person?
Thank you. So simply registering for VAT would not trigger itself a CT registration. It's a separate law and needs to be considered in its own right. And if someone is a taxable person, even if they are a free zone person, they need to register for corporate tax.
Clear enough. Moving to the next question, Juliana. If I am a free zone person that meets all the conditions to be a qualifying free zone person, earning only qualifying income that is eligible to benefit from 0% corporate tax, am I exempt from corporate tax and am I required to register for corporate tax?
Thank you, Ruda. In this case, we cannot say a qualifying free zone person is considered exempt. Rather, it's a taxable person that may benefit from the 0% on qualifying income. So qualifying free zone persons still need to meet all the compliance requirements, such as register for corporate taxes, file the tax return, maintain audit financial statements, transfer pricing documentation as any other taxpayer. Thank you.
Thank you so much. Going back to Rida, the next question. Is a UAE company with its main office in the mainland, outside the free zone, and branch in a free zone considered a free zone person?
So according to the free zone person definition under the Corporate Tax Law, Article 1, a person with a branch in a free zone will be considered as a free zone person. So yes, the answer is yes. It meets the definition of a free zone person.
Thank you so much. Moving back to Zubair, the next question. A company is incorporated in a free zone in the UAE. It has no business presence or office outside the free zone, is the company deemed to be a free zone person that is eligible to claim 0% corporate tax on qualifying income?
Thank you, Rida. So, being incorporated in a free zone is part of the requirement to be a free zone person, but it's important that they consider whether it's a free zone for corporate tax purposes. So that company needs to check with the free zone authority whether they are a free zone for corporate tax purposes, first and foremost.
Thank you so much, Zubair. Moving to the next question, Rida. A non-resident person sets up a branch in a free zone in the UAE. The branch is conducting purely property and auxiliary activities according to Article 14 of the Corporate Tax Law. Can the branch claim the qualifying free zone person status?
So in that case, as we said, I think this is a very interesting question. If you are a non-resident person, you have a branch in a free zone. The branch is in principle a permanent establishment. However, the activity conducted are only preparatory and auxiliary activity. Then in that case, it will fall outside the scope of a taxable person, definition of taxable person, because a taxable person need to be to have a permanent establishment in the UAE. Since the definition of permanent establishment provides for an exclusion for preparatory and auxiliary activity, you will not be considered as a taxable person, and then you will be outside of the the scope of CT, and it's not needed to claim the qualifying free zone person status in that case.
Thank you so much. The next question, Juliana. Certain free zones regulations allow entity to operate in a free zone without a physical office or employees. Is this acceptable from corporate tax law perspective, and will the free zone person still be able to benefit from 0% corporate tax rate?
Thanks, Ruda. So as we tried to explain in the presentation, regardless of the conditions of the free zone as a free zone person, in order to benefit from the 0%, the free zone person needs to look out the requirements for the corporate tax regime. And one of these requirements, as we saw, is to maintain adequate substance. So in practice, it's very unlikely if you don't have a team sitting in the free zone, if you don't have an office, it's very unlikely that you would meet the adequate substance requirement for free zone purposes. So the answer is very unlikely. Thank you.
Thank you so much, Juliana. Moving back to Zubair, the next question is a free zone person's main business activities are outside the free zone? Sorry, if a free zone person's main business activities are outside the free zone, but it has ancillary activities within the free zone, is it considered to have adequate substance in the free zone and is eligible to benefit from 0% corporate tax?
So it's effectively echoing what Juliana has just said. For any qualifying activities that are conducted in a free zone, there must be core income generating activities, SIGA. So in this scenario, again, it may be very unlikely that if there are the main business activities being carried out outside the free zone, then there is not substance in the free zone. But it is fact, it's subject to the facts and circumstances of any scenario. The important point is to note exactly what was just said. There needs to be substance in relation to each of the qualifying activities.
Thank you so much, Zubair. Moving to the next question. Rida, is the election by a free zone person to be subject to standard corporate tax irrevocable, or can the free zone person opt in and opt out for different tax periods?
So the election to be subject to corporate tax under Article 19 of the Corporate Tax Law is irrevocable. You can, elect again or be eligible again for the 0% tax rate for qualifying income after the end of the fourth subsequent tax period, and then in that case, after that specific tax period for which you elected and the 4 following tax period, you can choose again whether you want to elect to be subject to tax again, or you want to go and claim the 0% if you meet the condition. So to answer in a straightforward manner, the election to be subject to tax is irrevocable, and you need to just, be subject to the standard regime for that particular year and 4 following years. And then again, you have the choice whether to elect to be subject to tax or remain under the qualifying free zone person status if you meet the condition.
Clear enough, Rida, thank you. Juliana, can a qualifying free zone person use losses from free zone activities to reduce taxable income related to other business conducted outside the free zone?
Thanks, Ruda. So it's not possible this transfer because as one of the free zone requirements, in general, qualifying free zone persons, they cannot transfer or receiving tax losses from a different entity. So it's not possible.
Thank you so much. Rida, is a qualifying free zone person allowed to claim an exemption for its foreign permanent establishment?
So if you have a foreign permanent establishment, of course, the foreign permanent establishment is under, the corporate tax rule for free zone. It is subject to 9% under the, if you have a qualifying free zone person status. But nothing prevents a qualifying free zone person with respect to the foreign permanent establishment if the condition for the foreign PE exemption under the corporate tax law are met, and the article 24 of the corporate tax law, nothing prevents them if the conditions are met to claim the foreign PE exemption.
Thank you so much, Rida. Juliana, can a qualifying free zone person that has revenue less than 3 million dirhams claim small business relief and adopt cash basis of accounting?
Thanks, Ruda. So a qualifying free zone person cannot, on top of that, benefit from the small business relief. So business, they have to analyze their particular situation and decide whether for their particular case it's better to aim to be a qualifying free zone person or to elect for the small business relief. And with respect to the second point, a cash basis of accounting, it is possible. Qualifying free zone persons may decide to adapt a cash basis of accounting. However, there is still the requirement to maintain audited financial statements.
Thank you so much, Juliana. Clear enough. Zubair, can a company that is incorporated in the UAE with a branch in the free zone form part of a tax group by excluding the free zone branch income from their financials?
So the concept of tax group is from Article 40 of the Corporate Tax Law, and it specifies in Article 40, Clause 1, F, that they cannot be a qualifying free zone person. So effectively, they cannot form or join a tax group if they're a qualifying free zone person. However, that being said, if you have a branch in a free zone and effectively being the free zone parent, you have a domestic PE or a foreign PE, you are still considered as one taxable person, as one qualifying free zone person, as one person.
Clear enough. What if is a free zone person involved in marketing or advertising for a distributor considered to be engaged in the qualifying activity of distribution?
Okay, so in that situation, it wouldn't be. As mentioned earlier, the distribution of goods or materials, it's the distributor which takes on the title of the goods. In this scenario here, we effectively have consultancy services which are being provided by people engaging in marketing and advertising, and they are not conducting distribution itself.
Thank you so much. Juliana, the next question is, if a commodity is listed or traded on a recognized commodities exchange market, is it considered to be a qualifying commodity for the purpose of the qualifying activity of trading in qualifying commodities?
Thanks, Ruda. Yeah, so in this case, the commodities, regardless whether it's metal, mineral, if they are traded or it's possible that they are traded in a recognized commodities exchange market, we will deem that they are traded in the raw format and then they qualify to be considered as a qualifying commodity.
Thank you so much. Zubair, Interest is earned on surplus funds placed in term deposit by a qualifying free zone person. Will this be considered as income from excluded activity?
So this was mentioned earlier in terms of treasury and financing services. And so if you are doing self-investment, you have interest income which you are generating yourself, then it will fall within the qualifying activity of treasury and financing services. Importantly, it's worth noting that there needs to be substance in relation to this activity for it to be considered a qualifying activity. Thank you.
Thank you so much. Ladies and gentlemen, we would like to hear back from you, as you may please open your cameras and scan the QR code. We would highly appreciate your feedback about today's session, and we would like to know if you will be willing to attend future workshops and events. So if we can have a minute in submitting the survey. Is it working for all of us? No, it's not working? You may find the QR code as well on the giveaways. Once you open the bag, you will have it printed on the beginning of the box. So, and we will be sending it to you by email as well, if you can complete it, and it will be highly appreciated to hear back from you. And as our workshop nears its end, we have addressed as many questions as possible, and for further information, please refer back to the updated frequently asked question section on the FTA's website. Also, to stay in touch with the FTA, please follow us on our official social media channels to stay updated on any future workshops organized by the FTA. You can also visit the FTA's website to get the latest updates and contact us for any other inquiries. Additionally, you can reach out the call center or use the Contact Us page on the FTA's website to ask questions and inquiries. I hope that this awareness workshop has helped answer your inquiries and provided a better understanding of the principles of corporate tax law in the UAE. Thank you so much and have a great day.